Okay, welcome to the live stream, ladies and gentlemen. We're gonna do this a little more informally today than last night's video because we've got a lot to cover. We're gonna begin though with, which I feel is the biggest story. I'm surprised no one has covered this. I've not seen this on the mainstream media. It's absolutely baffling, but this is, to me, one of the biggest stories. I'm gonna just go over this in a moment, but here's a little insight into this. This is a march to independence. Christine Lagarde wants the EU to basically ditch the US dollar and go over to their own platform. You can't make this stuff up. This is exactly what we're talking about. So remember, we talked about the ECB and them doing their digital euro. We went over this the other day. When was that? It was the other day, I think. But we went over this digital euro that they're doing. We went over the new plans to steal people's, and it is stealing people's savings. They call it borrowing it because they believe we're all part of one big group, socialism. So we need to, it's in everyone's best interest. It's for the good of the people that the money can be borrowed and then it will benefit society. All this sort of nonsense that they come up with. Well, now we've just had this. I'm going to go through all of this. This is, to me, absolutely crazy. I'll just say it's crazy. So remember we talked on yesterday's video about China attacking the US dollar, dumping treasuries very hard, launching their new platform at exactly the same time, doing their tariffs back. So this was like a triple blow. There was a lot more, but those were the three main points. Well, the ECB, I feel, is kind of jumping on the back of that because, again, we covered this yesterday. Sanchez, a few other people want closer alliances with China than they do with the US. Sorry, am I getting that straight? They want closer alliances with China, who is aligned with Russia, North Korea, Iran, etc., than they do with the US. These people in the EU, the unelected officials, are crazy. I don't know what they are thinking with a lot of the stuff they say, but wait till this. So what they've announced now is they want to bypass the SWIFT system too. They use the words too because China's announced this, obviously. Lagarde said Europe's dependence on foreign digital payment infrastructure was coming to an end. Visa, MasterCard, PayPal, these are all US companies that we want to remove from Europe. She also mentioned Alipay, who is a Chinese-controlled company. She said we should make sure there is a European offer. We don't need the United States. We don't need the US dollar. Actually, yes, you do need the US dollar for trade. The euro is a tiny amount of global trade. The US dollar is huge. And yes, we again covered yesterday that that's going to be reduced because 38% of trade is now available to go through the Chinese system. I think it's going to be a bit of time yet because there's a lot of setup with that and there'll be a lot of merges and it's just going to take a little bit of time. So she thinks this is going to be worth 3 trillion euros annually. Well, me and my trusty calculator here did a little bit of number crunching myself and it's nowhere near 3 trillion. 300 billion possibly, but 3 trillion, no. I don't know how she did these calculations, if she actually did them, but I can't see this 3 trillion euros a year anywhere unless they're going to keep taking fees and taking people's money. That's the only thing I can see here. But she said this is going to be integrated with the Capital Markets Union. The CMU that we talked about the other day is going to be stealing everyone's money. Okay. They then said, there's another outlet here that's commented on this, the ECB is ramping up its warnings over the US dollar dominance of Europe, with one of its top officials calling for a digital euro to curb the influence of US dollar across the continent. I don't get this. What is going on with the EU? What's the word here? Drop it in the comments. Why are they trying? Just because the US is now saying, look, we're putting these tariffs on, which have been paused, by the way, it's 10%. We're putting these tariffs on at 10% because it's not a fair trade deal. Okay, well, if you look at all the media, none of them are even countering that statement. Do you notice this? They're not saying, actually it is a fair trade deal. It's just you got to look into the nuances of it because of this, this, and this, or this is subsidized, that's subsidized. So actually, it is kind of fair in these. No one's even saying that. They're just sort of attacking Trump's character and saying and comparing him to these sort of 1940s leaders with the little mustache. It doesn't make any sense, the sort of stuff that's coming out here. The ECB executive board member penned another article highlighting growing concerns over the US dollar and their stablecoins, arguing that launching a CBDC now is required to preserve the Eurozone's monetary sovereignty. He said a digital euro would limit the potential for foreign influence, and he published this on the 8th of April. So this was just 2 days ago. You can read it on the ECB website. Now, this just goes on and on and on, but he said a public-private partnership to remain sovereignty as coined by the WEF, the World Economic Forum. Yes, this is where they're getting their orders from, these unelected bureaucrats. In his latest piece, he reiterated that excessive reliance on foreign providers and card schemes compromise the monetary sovereignty of Europe. He's basically trying to tell all the Europeans, hey, look, there's massive danger here. You're at risk. Be very scared and be afraid because Donald Trump is going to be stealing all your money. In fact, he doubles down on this. It's in here somewhere that he says that he has a theory. I love this. He has a theory that Trump's going to launch his own Trump stablecoin, which he will control and own, and this is going to overrule and overrun all of Europe. These people, I don't know what they're smoking, I don't know what they're doing, mushrooms, whatever, who knows, but they are in cuckoo land with some of these theories that they are coming up with. And he also says that, this is another thing, this was Lagarde, they said, concerns have also been raised about the US and their new allegiance in the East, completely bypassing all reasons. We know who they're talking about here. That isn't what's happened. They haven't just abandoned Ukraine and they've got an allegiance with Russia. They're just, they're just saying this stuff to, I don't know, their agenda here. And it says, against this, Europe must be ready to respond to the US in kind. What exactly does that mean? Drop a comment, let me know your thoughts on that. Doesn't make any sense. But this goes on and on and on. We could talk about this all day, but I want to get on to a few other stories then. Oh yeah, and lastly, he said this is the reason that they need to get rid of cash, because there's too many criminals. And he doesn't even just say organized crime. He also goes on, and Lagarde jumps in here as well. They go on to say everyday citizens who are not paying their taxes. And the examples are ridiculous. Or someone sold their sofa. They didn't pay their tax when they sold their sofa on whatever, Facebook or whatever it is. These things are absolutely ridiculous. They truly are. Right, we've got a lot to cover. Let's carry on then. Let's move on. So we've covered this. They want to get rid of this. This is if you want to read some more of it. But this is what I wanted to mention then. Some of you were laughing, and I've got to say, I was also laughing yesterday when my video came out. I saw the comments and I was just sat there. I was laughing along with you because people were like, oh, look, you launched this video and the markets have just exploded upwards. Well, I was laughing for two reasons. One, yes, you're right, they did explode upwards, but that wasn't the point of the video. But two, because I knew that it was just the traders jumping in. Everyone was jumping in. They were buying the news, which was the pause on tariffs, because everyone knows the market's going to jump up. But then today, just watch. This is why I was sat there going, these people leaving comments, oh, I know how to do the stock market. I know all this. I know all that. It's going to explode now. No, it's not. These were the traders jumping in. None of the underlying issues have been resolved. We're still in recessionary territory. You've got all the top execs at the top banks, hedge funds, they all agree. They did raise the odds to 60% yesterday morning, but this was before the announcement. I think we're still 30-40% odds, maybe even 50% on a US recession. I don't think it's been averted. There's going to be, I'm not saying this is going to be like a depression, like some people are saying. That's not what I think, because they've averted this by reducing the tariffs. But you could still see a global recession. You could, as a result of all of this. We've got to see how this plays out. 10% tariffs, is that enough to do it? Maybe not. Maybe not. But if you think about what the main underlying structural issue is, there's too much debt. The servicing of the debt is too high. There's no way out of it through GDP growth for a lot of countries. So we're in a debt spiral where for most countries there's no way out. That, if you want it in black and white, is what's going on. So yeah, you can do your trading. Some of you, I was laughing at the comments. Oh, I'm trading this. I'm great, and you'll do very well from it. But it's not going to give you long-term success. What gives you long-term success is value investing, buying dividend producing stocks, things that actually are legacy, do really well. And I said yesterday, you know, my new program, sorry, not my new program, my program from before, my stock market program. It's got everything in there for you. It's got the screeners, everything. Just use that. You're overcomplicating all of this, seriously. So let's have a quick look here. I'll just back this up. So this is the one-day performance. Okay, so was I wrong? No. Here's the one-day performance. This is massive losses. We're still on the month down. Look at the losses on the month. Amazon 10%, Apple 14%, Meta 12%. We're still down. Doesn't matter how you look at it. Let's refresh all of these, actually. Let's refresh them all. We'll just check out the markets. On the past month, down 8% on the S&P. It's down 5.29 on the open. The Dow's down 4.6% on the open. It's still down 7.7 on the month. The Nasdaq, here we go, 6.27, down 8% on the month. Even if we look at the FTSE, which is obviously going to be up today because it's opened earlier, 3%, and we've had all the news that the traders could reflect upon, up 3% on the day. It doesn't mean anything. The structural instability still stands. It's still down 8% on the month. The DAX as well is up 4.5% today, again to be expected, but it's still down 9% on the month. You can go through your Australian indices, you can look at anything. It's still down, and it doesn't matter about the strength today. You have got underlying weaknesses. So that's why I said yesterday to grab the program. I'm going to extend the offer for until this evening. Anyone that wants to jump in, last call on this. And honestly, just do what I mentioned. Just do the script. Just jump ahead. You don't need to watch the first 8 modules right now, but you've got to do them. You know, and if you've already got the program, feel free to jump ahead and do modules 9 onwards, screeners, and understand all the other stuff. Let the screeners do the work for you. It will show you all the significantly undervalued stocks, and then you can do your research on them. It's very simple to show you how to do it all, and then you can ride the wave up properly. Okay, don't start believing all this hype. You're going to get caught out. So many people emailed me yesterday because they got caught out. They started buying when everything was like Tesla. Someone emailed me, oh yeah, I just bought Tesla, it's 20% up. You were wrong, ha ha ha. What's happened to Tesla today? It's crashed down. You've got to understand this fundamental stuff or you're going to lose a lot of money. So anyway, last call on it. I'm not going to mention it again. If you want it, go and grab it. Now let's continue on with, here we go. So let's have a look at a couple of bits of news then. Trump tariffs are actually 145% on China now, 10% on other countries. So here's a quick summary for you then. They're saying it was 125%, it's actually 145%, and they have offered 15 trade deals now to different countries. But this is clear, Trump knew this might cause a recession, but his fear of a depression, which was definitely possible, preceded his decision to pause the duties implementation for 90 days. 90 days might not be enough, it probably won't be enough time to sort of head this off. We've got massive issues ahead, really. And then this one made me laugh. Adam Schiff is asking who knew about Trump's planned pivot amid insider trading concerns. Isn't it interesting that especially now you've got all the Democrats who are like crying, insider trading, all these people, they've been doing that. Pelosi, best investor on planet Earth, Nancy Pelosi, she's been doing this forever and no one said anything. all of these politicians who were in the last cabinet, they were doing all this trading. No one said anything. And now I think it's one person, was it Marjorie or someone? Green. One person has done it. And well, I'm not saying she did it. I don't know if she was privy. Wink, wink. We don't know, do we? Wink, wink. But one person's done it, and now they're all going, there's this, they want to start this big investigation. And yet they were all doing it forever. It is the irony of the group here. Okay, let's carry on. They may even delist Chinese stocks from US indices. They said everything is on the table. This is a trade war, ladies and gentlemen. This really is. And what I think they're trying to do, and this is my opinion, I feel as though the US is trying to box China in at the moment. They're trying to really hit them where it hurts, which is economically. And you can read a lot more if you, I mean, I don't really read the Wall Street Journal. It's not my preferred read, but this is an interesting read. It goes into some of the reasons they feel that this was reversed. They think, quite funny, what one of them said, they think the reason Trump reversed it because he watched Fox News and he saw Jamie Dimon being interviewed, and that was it. That was it. As soon as he saw that, he did this reverse. No, he didn't. It was already planned. He's a deal maker. What he did was this was planned all along. Okay, because again, read The Art of the Deal. I've read that book several times over. It tells you the mindset. He always goes for the biggest things. It's like Europe and NATO. Okay, I want 5%. He didn't want 5%. He really wanted 3%. He just wanted to get them up from where they were. That's what it was about. And eventually what happened, oh, okay, fine, I'll settle for 3%. So same with these tariffs, putting in these massive tariffs on. It is more of a tactic. It's a negotiation tactic. He says, oh, we're going to put these massive tariffs on so that everybody comes to the negotiation table, which is basically what's happened. So whatever the plan was in detail, we don't really know, but the strategy has worked. The only one it didn't really work on is China, but I think you're going to see some movement there. Although I do think they're trying to box them in. That is my sort of, having looked at it and done all the numbers, I think they're trying to box them in. So we'll see how that actually goes. But we did see, look at the S&P here. This was the third biggest one-day gain since World War II was yesterday. We'll probably see a big drop today, but this is it, 9.5%. The Dow as well. This was the 1, 2, 3, 4, 5. The sixth biggest day at 7.8%. The second biggest day for the NASDAQ, that was 12%. Just huge gains. That was obviously all the tech stocks recovering. And okay, I want to talk about the 10-year Treasury. This is really crucial because everyone's got this way incorrectly. This is not due to the tariffs. There's a lot more to it, the 10-year sell-offs. But it's going to take me too long to go over that in this video. We'll cover that on I'll do another stream to cover that, because the 10-year really is signifying some pretty serious tactics going on behind the scenes. It's not just because people are selling it off and retail investors are selling it off. Why would you be selling it off when you can get a 4.5% yield and flee to safety? Who wrote these articles? That's my question. That retailers are getting rid of them, and no, they're not. People are fleeing to safety. And a 4.5% yield, it's probably about 3.5% by the time of recording this video. But that's really what's going on here. Okay, I think that's it for today. Last reminder on the stock market, grab that if it's of interest to you. Apart from that, let's do a great walk and talk tomorrow. Should be a good one, should have good weather. It's going to be sunny here. So with that in mind, thank you so much. Take care, God bless, and I'll see you next time.